Hello traders and welcome back to my YouTube channel, IPDATrader. Now in today's video, we're going to be taking a look into one of the daily cycle variants that happens to occur very often. And this video is going to be absolutely related to my previous video on the daily cycle, which is up on my YouTube channel, where I talk about the specific times of the session, what usually happens when the Asia highs and lows get printed and that sort of stuff. So you're going to need some of that knowledge for this particular video. So if you haven't watched the Forex daily cycle video, I highly suggest you do so before proceeding with this one. However, before we get into the educational content, I want to make a public announcement related to mentorship. There's been many of you guys that have been messaging me for private mentorship, and I want to make an announcement to clear this up. So I will be releasing a mentorship program within the next 2 weeks. So please, there's no need to message me privately. As I said, I appreciate the support, but there's no need to message me privately due to the fact that I will be publicly announcing the mentorship once everything is actually up and running. So far, I'm still working on the content. I'm trying to make it the best I can, really providing a step-by-step sort of approach that everyone is allowed to follow to understand the way we look at the markets and trade them every day. So finally, with that out of the way, let's get started with the video. So traders, let's actually get started with the educational content for today. As we said, we're going to be taking a look at this particular variant of the daily cycle. You can potentially study the knowledge, sort of try to spot similarities within other daily cycles that may share some similarities, and potentially create something that works for yourself, right? That's the ultimate goal. I'm just giving you tools that you can potentially use, right? So let's imagine you are a trader and you're looking to trade the London session. Now, one piece of advice that I would highly suggest everyone do, if you're looking to trade London session, you want to be watching the charts at least 1 hour before London Open, right? So that you can have the time to actually see what happened during the time that you were away from the charts, meaning what is Frankfurt doing? What did Asia and Sydney do, right? And that's sort of how you can potentially frame a bias for the day. So let's actually start following price and reading this particular daily cycle. So we start over here, and if you watch my previous video, you know that the first thing you want to do is actually denote your Sydney range, which starts at 10 over here and ends at 12. Again, my time zone is set to this particular area. Feel free to replicate that if that's going to help you with the times in the day. So we see this particular Sydney range. Cool. We want to denote the low over here. We understand that, hey, this is our low of the Sydney range, and our high is actually sitting over here, right? It is this bullish candle over here with no top wick at the top. So we go ahead, we can also actually separate Sydney from true Asia, right? So we can draw a vertical line starting at 12. You can, whoops. Oh, let me fix this. Okay. You can say to yourself that, hey, over here, this is all Sydney right here. And after that, we've got what is known as true Asia right here. So let's keep following price and let's see what's happening, right? So very next thing I would do is actually label my Sydney high over here, and my Sydney low, which is this bearish wick over here, Sydney low. And you know, and you should really understand that those are liquidity pools. So you want to see what's sort of happening over there, right? So we follow Asia. What do? We push up, we take out the Sydney high into a structure point, right? Just as I usually tell you guys about, we're going to be taking that Sydney high into a particular structure point, which is what we do over here. We hit this block and we start moving lower. So we keep following, right? We start moving lower, 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 and we sort of stop over here at first, create some rejection, sort of equal lows, right? You can see how this very well matches up with this wick low over here, which is also your Sydney low, right? You need to sort of understand that stuff. So we sort of stop over here first, move back away a bit, and we come back down and take the Sydney low. Now what's essentially happening over here is we moved up, took the Sydney high into a structure point, meaning we mitigated positions, we started moving lower, we took out the Sydney low, and now we're moving into that time window of 2:30 till 3:30, where I always tell you that either the high or the low of the Asia session is going to get printed around that time. So you can sort of look over here, the 3:35 a.m. we get the Asia low printed over here, right? We can denote that and we can say to ourselves, hey, this is actually a pool of liquidity known as Asia low. So what do we do next, right? We create the low and we retrace up a bit, just like this, nothing too special. Then Frankfurt comes in, right? And as I said before, Frankfurt starts sort of 6:15, 6:20, right? And ends really 15 minutes before London opening, right? So we can go ahead and do that. And we can say to ourselves, hey, this is our Frankfurt range, right? I would actually go ahead and do something like this and something like this. And now we can say to ourselves, this is our Frankfurt range. So we follow up with Frankfurt, right? As I told you in the daily cycle video, the goal of Frankfurt is to take one of both sides out, right? Whether that be the Asia low or Asia high, you got to figure out that for yourself. But one of the sides is probably going to get taken. That doesn't mean that Frankfurt will take always one side. It just means that the probability tells us that one of the sides is going to get raided. So what do we do here, guys? Because this is pretty important. We actually take out the Asia low in Frankfurt right here and break market structure at the same time, right? Because this is a low, this is a retracement within this internal trend, right? If we were to be looking at this particular structure point, just like this could very well be a lower high. And once we trade below the low, we understand that we have a lower low and we can potentially have a retracement to then continue down, right? So what do we see here? We take out the Asia low with a wick. That's also something important, but that's reserved for the mentorship. So we take the Asia low and we retrace, preparing what? Moving back into equilibrium point. What I always tell you guys, you want to be watching out for POIs close to the 50% of your range, which is essentially your equilibrium point. So we move back up, seeking that equilibrium. We hit some sort of POI, right? We can actually go ahead and drag it across so you guys can see it. Over here, this is a POI on its own. And if we go slightly higher, we may see it more precisely. Maybe a 15-minute. Yes, you should understand that this particular formation wick to wick is a order block on a lower time frame, so you know that that is a POI, right? But let's actually zoom back into the lower time frame, 5 minutes. So Frankfurt comes back up, retraces, and prepares for London to actually smash and expand the daily range. You could have gotten that information from the daily charts, but we're now focusing on the daily, on the particular daily cycle, right? So pre-London, really close to London Open, right? 15 minutes before that, we are retracing high up. We are getting those good. We're letting London get have those good and really affordable prices to then sell back down, right? So that's exactly what's happening here. London then comes back in right here, and we expand the daily range lower, just like this. So main takeaways here, guys, you want to be sort of following this process. If you do not follow the process, it is very likely that you're going to be getting confused trying to track the daily cycle, right? You want to be denoting your pools of liquidities, such as the Asia high in this case, right? Asia low, Sydney high, Sydney low. We grab all those out. We create the low at 3:30 a.m. We retrace. Frankfurt comes in, raids the Asia low. That's key. look at how it got rated with the wick, but that's mentorship stuff. So then we retrace back up, we seek for that equilibrium point, right? We're looking for that equilibrium point. We then get that equilibrium point hit, which is also a POI. Take that Frankfurt high out right here, and then London kicks in, right? Sort of a London Frankfurt repricing for London. That's sort of what's happening here and the main idea. That is it in regards to this particular daily cycle variant, right? However, I want to make very clear that you should not just be using this information to take trades, right? You still want to be flicking through time frames, potentially a 30-minute, and trying to see what's overall happening, right? What is the overall picture about structure, liquidity, points of interest telling you? Right? We can clearly see over here that we had another Asia low sitting on a pool of liquidity sitting over here, right? You can now say to yourself that, okay, so Frankfurt came in, took the low, repriced for London, and London then had this target to met, right? You need to understand and look at sessions as different times during the day that have specific tasks to fulfill. That's essentially it. You want to be looking at sessions as each session is trying to liquidate the other, or sort of creating liquidity for the upcoming one. You need to find what a session may be doing and why it may be doing that, right? However, you should understand that I cannot get into too much detail over here in the free YouTube channel, because I do still want to reserve some information and knowledge for the people that end up joining the mentorship that, as you all know, is coming very soon, right? In a matter of 1 to 2 weeks. Another thing we can see over here, right, is that, for example, the previous Asia high was not taken, right? And now this one is has been left unliquidated as well. This tells you something, right? This potentially can tell you that, hey, now we're starting to clear liquidity to the downside, and we may be saving some sort of potential Asia highs that we want to save for when we actually turn around and start going the other way. However, I don't want to get into too much detail right now into that. So either way, guys, I hope you guys found some value over here. Leave a like, subscribe if you found some value over here. And until next video, I wish you all good and profitable trading. I see you guys soon.